Those who do not learn from history are doomed to repeat the same mistakes of the past. Those who do not learn from their mistakes are doomed to repeat them. And I fear that, unfortunately, it looks like a lot of the same mistakes from the past leading up to the 2008 financial crisis, especially the housing bubble, are being repeated. The story that you can see on your screen is from less than 10 days ago from Diana Olick, who is the real estate reporter for CNBC, and she covers a lot of this. And the story is refinancing surges as homeowners pull out the most cash in 12 years. Refinance lending has nearly doubled over the past 3 quarters, according to the research group Black Knight. And cash out refinances were up 24% since the last quarter of 2018 and made up 52% of all refinances, even though refinancing is a lot harder now. Even with lower interest rates, there's a lot more documentation to do for refinancing, so it's a lot harder to do. And homeowners withdrew, and this is the scary one, a collective $36 billion in home equity, the highest amount in nearly 12 years. So this is a good question from Jesse asking, are they buying U.S. stocks, equity? Maybe, some. The data doesn't reflect a massive spike in retail buying of equity. My educated guess is it's to pay off bills. It's maybe to fund Christmas presents. There was a similar story that I think is related to this, that October credit card usage surges to all-time high as Americans regain their spending mojo. So I think the credit card usage amount has spiked because of Christmas and Black Friday and Cyber Monday, and Americans are buying more. The ones who at least have higher home prices and their stock portfolios are doing well are indeed actually buying more for Christmas. There is also more deals. More deals from the retailers. I mean, the amount of discounting that the retailers are doing, we're not going to see this reflected yet, but the amount of discounting. So there's been record amounts of online sales that have been tracked from the data out there, but the amount of discounting that is occurring is enormous. No, so Jesse, I don't think the majority of the cash for home equity that was pulled out was to buy U.S. stocks. I think it was some of it. I think the majority was for Americans to maintain their lifestyle, because a lot of them are getting killed with higher property taxes, stagflation in taxes, new taxes being layered on, old taxes being increased, and then also to maybe buy Christmas presents or to maybe pay off credit card debt. Oh, it was a joke. China toxic sausage toys. I have not heard that one. Keeping up with the Joneses. Might be. It is repo madness. Everyone's using repo madness now. And of course, not giving me credit for it. Because that's how the alternative media and the mainstream financial media rolls. So let me read the rest of the article. I read the key points already. Near rock bottom mortgage interest rates are behind a surge in refinance activity. After hitting an 18-year low at the end of last year, refinance lending has nearly doubled over the past 3 quarters, according to Black Knight. In the third quarter of this year, refinance volume was up 132% annually to its highest level in nearly 3 years. Most of the refinancing in the third quarter of this year was done by borrowers looking to improve their rate or the term on their current mortgage, but a growing number of borrowers are taking money out of their homes. Cash out refinances were up 24% since the last quarter of 2018 and made up 52% of all refinances. Homeowners withdrew a collective $36 billion in home equity, the highest amount in nearly 12 years. A lot of the same mistakes that occurred leading up to the 2008 financial crisis. This despite the fact that tappable equity, the amount available to borrowers while still retaining 20% equity in the home, fell slightly, down 1% from the all-time high in the second quarter. Tappable equity is still up 5% annually. Of the approximately, and the reason tappable equity is still up 5% annually is if you look on the St. Louis Fed, the Fed website of the Case-Shiller U.S. National Home Price Index. So this is the aggregate of, they try to track the average home price increases of more than 20 cities. So they're separate indexes for the Case-Shiller for the top 10 largest cities with the home price index, and then they have the top 20. But this is the larger one. And really, the Case-Shiller home price index, it got really high in up to 2006, and then it collapsed until really 2012. 2012 was the culmination of the Fed throwing everything they could at the real estate market, buying up all the toxic mortgage-backed securities, and then also on top of that, they gave enormous amounts of interest-free loans to private equity like Blackstone and BlackRock and hedge funds, and these guys were taking advantage of that, of the free money, and they were buying entire, rows of houses, entire streets in places like Las Vegas and others. So really, it took a few years of the Fed just throwing insane amounts of free money at private equity and hedge funds for that real estate index, the Case-Shiller, to finally turn around. It got as high as 183 on November 2006 before it started falling, and it got really low compared to the 2006 numbers in 2009, 8, and 9, and it was still going down. Most people aren't aware of this. The real estate Case-Shiller home price index was still actually going down in 2010, 11, and finally it bottomed in February 2012, according to the data, before it started to rise. And it went from 134, and I'll put a link to the chart if you want to look at this in the information and description section later. Went from 134 in 2012, January 2012, up to right now it's at 212.203 in September. The last time they did a measurement, it says, was September 2019. So I guess this is a lag. The last time this was updated was September on the St. Louis Fed website. And the 20-city composite one has also risen substantially since 2012. For the 20-city composites at 134 then, it's up to 218 now. And the 10-city composite it got down to 146 in 2012. No, I actually got a 154 in June of 2012. That looks like the lowest. And now it's up to 230. So there's been big rallies. That's Chinese money coming in here to the United States and buying up. That's foreigners. That's Europeans who want to retire here. And that's, of course, central bank influence, all these central banks. And people still view on a relative basis the U.S. as safer. And, of course, governments and banks, governments at all levels. So at the federal, state, and local levels, governments love higher home prices, absolutely love higher home prices. Because that means at the federal level, that means capital gains taxes when people sell property, when people sell houses. So that's capital gains taxes at the federal level. And at the state and local level, that means that the local governments do not have to decrease their budgets because they know with higher home prices that that's going to mean that they can keep raising property taxes. So they do not have to do any budget cuts, even though they should, but they won't do those. And then the banks love higher real estate prices because then that means more equity. So people can borrow against that equity, or that means better collateral. So if people own a home that's going up in value, they could pledge that home. If you're not familiar with how things work at a large bank now here in the US, if you go down to a local bank, say a Wells Fargo or a Bank of America, and you have a business idea, or you already have, let's say you have a small little online business, right? And you want to expand it. So what you would have to do if you want to take out a small business loan is you would have to normally, if you want to take out like a $80,000 or $100,000 loan, let's say you have pretty good cash flow. Let's say you're making like an extra $6,000 a month on your side hustle. So you have your full-time job, you have your home, which is going up in value, and you want to expand your online business, which is, making you a decent amount of money on the side, but not enough for you to live on. But you want to quit your job because you hate it and you see the potential for your small business to expand it, and you go to the bank and you want to get a small business loan. Well, the bank's going to make you now pledge your home as collateral to get that small business loan. So the banks love higher real estate prices, and that means that they can keep expanding their loan books. When real estate prices go in reverse, that kills the banks. Because then they're stuck with potentially owning homes that they don't want to own, as we saw in 2007, 8, and 9. And part of 2010, before the Fed was able to start giving, private equity and hedge funds free money to start taking these homes off the banks. There was also a lot of real estate investors who came in all cash back then and bought a lot of real estate. Dr. Mark Faber, who I'm friends with, and others were doing that. Okay, back to the article. So tappable equity, no surprise, tappable equity is up because home prices are up a lot since 2012. So as long as home prices keep going up, this is good for banks. This is good for governments at all levels. Of the approximately, and also good for people who are now tapping their homes, because this game can continue at least for a little while longer. Because apparently no one learns from past mistakes or from history. Of the approximately 45 million borrowers who have tappable equity, about 65% have interest rates higher than today's rates. Given that tappable equity continues to grow, 6.2 trillion as of Q3 2019, and the continued headwinds facing the HELOC, home equity line of credit market, this is a segment lenders and servicers may likely focus on in coming months, says Ben Grabowski, president of Black Knight Data and Analytics. Any upward movement in rates would likely only drive the cash out share of lending higher. Interesting. That if interest rates moved up, people would pull more cash out. Interesting. Borrowers who took out their mortgages in 2018 made up a growing share of refinances this year. They accounted for 1 in 5 in the first 2 quarters of this year, but then jumped to make up 1/3 of refinance organizations in the third quarter. Newer loans from last year have much higher balances, and interest rates were about a full percentage point higher than they are today. Borrowers last year had pre-finance loan balances of, on average, $380,000, and early 2019 loans had balances of $560,000. Homeowners who refinanced out of loans made in 2008 through 2011 had much smaller average balances, between $160,000 and $172,000, but more than $80,000 of those refinances were cash outs. And that's it for the article. JM says homes will be worth trillions as long as the printing does not stop. Everyone will be a trillionaire. So I've heard stories of a lot of people in a lot of different states where they've done very minimal improvements to their homes, and home prices and homes that they bought 3, 4, 5, 6 decades ago that have either stayed in the family through inheritance, and there's been very minimal improvements, have gone in value from $50,000, $60,000, $70,000, $80,000 up tenfold in price or more. And I'm not sure that any of this government data is reflecting any of that. So the inflation in asset prices and home prices is enormous. And that's benefited governments heavily with capital gains taxes and also at the state and local level with property taxes. Shell Chicago says it's not an automatic bad thing as long as the cash pulled out is used wisely. And how many people are going to use the cash wisely? What percentage do you think? I would probably, if I was going to give an educated guess of the people pulling the cash out, I would say less than half. And that's probably being too kind. A lot of people are just going to pull that cash out to go on vacation, buy Christmas presents, pay off credit card bills. Paying off credit card bills is fine because credit card bills are higher interest rates. But mostly to maintain their standard of living. I very seriously doubt a lot of people are pulling cash out of their equity, with the refinancing to invest in their side business to grow their business, to grow their revenues. I very seriously doubt that's where most of it's going. You know, maybe some people are gambling on stocks. Maybe people are pulling it out to gamble on Tesla. I don't know. Or index funds. Since the mainstream financial media loves index funds. There's so many problems with index funds, but they're all just being ignored for now. Oh, one more thing I wanted to talk about. So this is from tradingeconomics.com, which also tracks the Case-Shiller home price index. The websites are the S&P Dow Jones Index tracks multiple, the 20 city composite and the 10 city composite. And I'll attach links to those if you want to look at those, as well as the St. Louis Fed Case-Shiller home price index. But Trading Economics they drilled down a little bit more into the data. And according to them, Okay, Phoenix recorded the biggest increase in home prices this year, 2019, followed by Charlotte at 4.6. So Phoenix increased 6%, followed by Charlotte at 4.6% and Tampa at 4.5%, while the smallest gains were seen in Chicago, New York, Seattle, and LA. Prices in San Francisco fell 0.7%. Yeah, that falling of prices in San Francisco is what I'm also hearing with what Wolf Richter, and I recommend his wolfstreet.com podcast. It's really good. He tracks the local San Francisco housing market, and he has a contacts list there of real estate agents and commercial real estate brokers, and that matches up with what he is being told by his real estate contacts there locally. The other thing I want to bring up is the Washington, D.C. metro area. I'm not sure if it's coming up in the data, but here in the D.C. metro area, if you're not familiar with the area, there's Northern Virginia, there's Montgomery County, and Prince George's County, which are in Maryland, but right outside of the District of Columbia, and then there's downtown DC. And the amount of construction, first of all, there's a ton of gentrification going on. So a lot of the older houses and poor neighborhoods, those are being gentrified. Like, if you're familiar with what's happened to Brooklyn in the last 2 or 3 decades, a lot of that has been happening here in DC and Northern Virginia, many different neighborhoods. And they're also building now more and more expensive townhouses in Northern Virginia and parts of Maryland, further and further away from Washington, D.C. So the amount of construction cranes here in this area is nuts. So there's a spillover bubble, I think, in Seattle, from Vancouver, because the Vancouver politicians, I believe, are finally cracking down now on all that crazy amounts of money that went into Vancouver from China and drug cartels and organized crime that they didn't care about, that the Vancouver politicians didn't care about for so long. Finally, the politicians are listening to the people in Vancouver who largely wanted, legislation on that to prevent the money from going in there. There's like an empty house tax, because there's entire streets basically of empty homes in Vancouver where a very rich foreigner owns 1 or 2 homes on the entire street. Sometimes it's more than that, and they don't live there. So they just pay the property taxes and they don't live there. It's like their escape plan or emergency plan, often from China. But the amount of construction cranes here in the Washington, D.C. metro area and the amount of teardowns that is happening is nuts. And I don't think it's being reflected yet in the data, but the amount of speculative fervor that I'm hearing in the Washington, D.C. metro area, especially because Amazon's building its second location in the Crystal City area, which is in a neighborhood of Alexandria. So a lot of the condos, single-family homes in that area. My best friend is a real estate agent in this area for over 5 years now. He works at one of the top firms, so he looks at this on a daily basis. And he's been telling me now for months just the crazy stories of the amount of speculative capital coming into the DC metro area. There is all cash buyers willing to speculate and pay way above the asking price for good condos in the Crystal City area of Alexandria and single family homes around there. Some of the stories of people overpaying are pretty crazy. No mortgage. They're willing to come in and pay $50,000, $60,000 cash above the asking price. And he says that some of these condos and single family homes in that specific area, it's not entirely DC metro area wide, but it's that specific area for now, that a lot of those home prices are going up. They're up 25% in a year, the asking prices, due to speculative behavior. So the DC metro area is going to be probably the largest housing bubble left in the US. And I'm not sure it's being tracked accurately. One of my buddies, Kevin Duffy, the hedge fund manager at Bearing Asset Management, this was earlier this year, I compiled a bunch of articles for him and sent it to him, tracking the construction cranes in the area. Just around the Nationals baseball stadium, Nats Park, this was not this year, but this, because a lot of the construction is done already or close to done, but this was in the last couple years. But in the last 2 or 3 years prior to this year, there was at one point, I think, a dozen construction cranes just right around the baseball stadium, just building brand new luxury condos and hotels and restaurants. It was crazy. And there's enormous amounts of construction cranes all over downtown DC and the DC metro area. There's a lot of teardowns going on, and a lot of the poorer neighborhoods, either in DC or closest to DC, are being gentrified now. If you come to the DC metro area to vacation, or you want to meet me in person, hang out, maybe buy me beer or dinner or something like that, take a look in the DC metro area in Arlington around like the Clarendon neighborhood, Ballston, Clarendon, because Clarendon used to be very dilapidated, used to be very dangerous, lots of crime. They've now torn down in the last like 15, 20 years, almost all the old strip malls and buildings, and been replaced with lots of brand new stuff. The prices are sky high on that. I mean, the average person cannot really afford to live there anymore. Yeah, so eventually I think the amount of speculative real estate buying will show up in the data for the DC metro area, but the boots on the ground stuff, I don't think it's showing up in the data from what I'm hearing from a really good source who checks us every day, that it's crazy here. And rent prices are obviously up a lot in the last 10 or 15 years, rent prices in this area. And so are property taxes. Michael says, repo is not such a problem. The Fed has plenty of space to print. Hello, Michael. Repo is a problem, but right now the dollar is not reacting that much to it yet. Now, the dollar did make briefly 5-month lows on the dollar index, but it still was only a little bit below 97. At some point, if the Fed keeps, in my opinion, if the Fed keeps issuing new press releases every couple weeks, that the amount of repos, especially these term repos, because the term repos are not overnight, they're not short-term temporary loans. There's evidence, a lot of evidence, that these term repos, a 14-day, 15-day, 28-day, 32-day, 42-day term repos are not all rolling off, that they're being rolled over continuously and added to the Fed's official balance sheet. And I think some more people are starting to get worried. The more and more press releases the Fed issues about new repos, the worse this is going to get with the dollar. Pebbleman, thank you for the super chat. Do I think home prices will ever go down? Do you think home prices, what do you mean prices? I mean, there's a lot of prices on things. What do you mean specifically? Okay, so this fits in with my stagflate and tax and lie thesis that yes, home prices could go down for maybe 6 months or 12 months, but right now there's nothing to stop the Federal Reserve from changing the rules and from increasing not QE to 150 billion or 200 billion or 250 billion or 300 billion per month. There's nothing to stop that right now. So you may have a window, if you have cash, Pebbleman, you may have a window for 6 months or 12 months, and this is why I have some cash in case of opportunity, where some really good stocks, some really good companies I like, I'm hoping maybe Franco-Nevada, if all the stocks do crash for maybe 6 months or something before the Fed decides to do massive QE. I'm not saying the probability is guaranteed. I'm saying it's a possibility. But we're in an environment now where none of the central banks want to allow, especially the major central banks like the Bank of Japan, European Central Bank, People's Bank of China, and of course the Federal Reserve. None of these large central banks want to allow asset prices to fall for a prolonged period of time. They will not allow it for longer than a couple months or 6 months, maybe at most like 12 months, without changing the rules and further, maybe changing the accounting rules again, like what they did for the banks in March of 2009, and then further and further interventions. Because then things look even more insolvent if asset prices fall and stay down there. And this is the problem with digital debt-based fiat currency. it allows these central banks to do crazy things to try to prevent asset prices from falling. Meanwhile, we're being lectured on CNBC, on Bloomberg, on Federal Reserve speeches, talking heads on those two business networks that there is no inflation. Totally laughable. Totally laughable. Most of the inflation, there's still a good amount of stagflation in the real economy, but most of the inflation has gone into asset prices in the last 10 years. And I just talked about how home prices, even though a lot of homeowners did not make any investments into their home, like I've heard stories in New Jersey and New York of people buying homes for like $60,000 right after World War II, when the GIs came home, and they bought their house for a tiny little mortgage, paid it off, did not make a lot of upgrades, and now here we are decades later, and the home is worth over $500,000, but no upgrades were made. So just on inflation and maybe increased demand for people who want to live in that area, a home price which was purchased in the late 1940s, early 1950s for $60,000 is now selling for over $800,000. But the official government data doesn't call that inflation. Even though they didn't make any upgrades to it. In fact, the property is dilapidated, and if you talk to real estate agents, they would probably say it's a teardown. So if you pay $800,000 for that house or $1 million, this is just a hypothetical, or you pay $800,000 for the house or $1 million for that house, if it's in a nice area, it's a teardown. That's happening all over the place, especially here in the Northern Virginia area. People are paying $800,000, $1 million, $1.2 million for the land, knocking down the house, and then spending a lot more money building the house. Tons of builders are doing that. They're borrowing money like crazy to do that. That's because of cheap interest rates. Builders are doing that like crazy here in the DC metro area, in different neighborhoods. Yeah, Jesse says it. Yeah, it's happened all around where I live. They're doing it like crazy now in Prince George's County. And bad neighborhoods in DC. There's tons of gentrification. There's tons of teardowns. All over Falls Church. Stalemate, Social Security is a Ponzi scheme. More people have to pay in than take out. And eventually it's going to totally go upside down. The first woman who got a check, go and look this up. The first woman who got a Social Security check put no money in. It was a scam from the beginning. She got a big check and she didn't put any money in. I think the people in power want higher home prices for a bunch of different reasons. I told you why it's in the government's best interest at all levels, federal, state, local, for higher home prices. Now, if there is an oil bust, right? There's a natural gas bust now. I talked about this last night on the podcast. The chart of the natural gas prices is awful. Absolutely horrible. It's crashed even more since January 2018, natural gas prices. So natural gas is in an enormous bust. There's going to be tons and tons of write-downs going forward, it looks like, from the larger super major oil and natural gas companies on their natural gas investments. There's going to be big write-downs. So any of those natural gas areas, the home prices around there are going to be very, very depressed. There might be this is just my opinion, there might be bargain opportunities around there. But if we have an oil bust, in North Dakota or parts of that oil bust, if we have an oil bust, there could be bargains there. That's why you need cash, though. Cash gives you opportunities. Now, you don't want to be holding lots of dollars long term, but if you have cash, then you have the ability to take advantage of an opportunity. Keebler Orc says if the price of real estate drops, they can't collect the taxes. Yeah, but the governments can't manipulate prices perfectly. They can't manipulate the prices perfectly. Although if you do look at the Case-Shiller home price index chart from January 2012 to present, it's slowly going up every year. It does look like it's creepy. From January 2012 to present, on the St. Louis Fed website, the National Home Price Index, it is creepy how consistently up it's gone. Santana, how's California going to have power then? California's so stupid. California's such a mess. They want to ban natural gas now too. Their utility is a joke with the bankruptcy and all that. Oh my God, there's so many problems. I lived in California a long time. And I don't think I would move back. There would have to be a total 180 in California for me to want to move back, and I don't see that happening. IBJI, there's a good joke. California loves natural stuff. Why not natural gas too? Why should they use their own natural gas or their own power? They can import the natural gas from Mexico or Russia through Mexico. I was hearing that California was importing natural gas through a pipeline from Mexico that Russia was offloading in Mexico. I'm not sure if they're still doing that. And then California was also importing power from Nevada and some other states. It's just a total disaster in California. It's a total clown show, bro. There are some nice things about California. There's a lot of pretty girls. There's good food. The weather normally is pretty good. There's also a lot of really bad things that I don't think outweigh the good things now in California. Wow, California gets half its power from Texas. Ooh, that's bad. Anthony says California is a failed state. California is a richer version of Greece or Italy. Sasha asks, is there a chance that if there is a crash, rural properties actually go up as people sell their expensive urban properties and flee to affordable areas? Has it happened before? Those people would have been late with their prepping. What most of the rich people have already done is bought bunkers in New Zealand. I think a lot of people have already transitioned. A lot of people woke up in 2000. I woke up in 2008 during the 2008 financial crisis. So a lot of people woke up during then, even though they printed enough money. All these different governments have to where the stock market is at close to all-time highs. The home prices have rallied enormously since 2012 nationally. Santana, there's trade-offs living everywhere. There's good and bad. There's no perfect place to live. If you don't speak the local language, the locals are going to view you as a target to rob, to steal from and rob and hustle. Sasha, I think most of those people still believe in the system. They still believe in the status quo, unfortunately. That even if there was another 2008 financial crisis or worse, there would a lot of people, if the Fed printed more money, let's say the Fed expanded the balance sheet again, announced a larger, not QE, this is hypothetical, announced a larger QE to 120 billion per month or 150 or 200 billion per month, a lot of people wouldn't care. A lot of the people who are already making good money at their jobs, working the system, either as a political entrepreneur or a crony or a lobbyist or working a corporate job. They're making plenty of money. They have 2 nice cars. They have a nice house. They go on vacation a couple times a year, maybe more than that. They have a couple girlfriends, or they have a wife and a girlfriend, or a husband and a boyfriend. So those people, they like the status quo. They're kicking its ass. Well, they're doing pretty good. They're not gonna want to move to, quit everything and move to a farm. They're going on vacation all the time. They're getting laid when they want. They're making pretty good money. Those people like the system. System has treated them pretty well. Yes, maybe they're working 80 to 100 hours, maybe more than that, but they're doing pretty well by most measurements. So no, I don't think a lot of people will be red-pilled if there's another 2008 or worse. I really don't. My parents don't even listen to my podcast. People ask me all the time, like, aren't your parents proud of you? They don't listen to anything I say. They're not red-pilled at all. They believe in the system. And I can lay out facts, figures, arguments. They don't want to hear any of it. Eve, a lot of people are morally bankrupt. People who are making there's a lot of people with low ethics and little or no morals. It's all across the board. I know a lot of rich people with really, really bad ethics and little or no morals. And most of those rich people don't agree with anything I say. There are libertarians who are also like that too. Actually, a lot of libertarians. I can't publicly name them because I don't want to get sued. But there's a lot of them. Our people should learn ethics from their parents, not from school. People should learn ethics from their parents. It should not be taught in school. There's things that people should have learned from their parents that have not been taught properly. So there's a lot of people, even if they had two-parent households, still didn't learn the useful things to be a successful adult. There's been bad parenting for multiple generations now here in the U.S. Really, really bad parenting. Even from two-parent homes. But I'm not going to go into that more on a podcast like this, because then that's going to go into the Sugar Daddy episode, and we're not going there. Sugar Daddy, Sugar Baby episode. Look, everyone says that the schools need to teach all these different things. The parents need to teach these things. There's a lot of things I did not learn from my parents that as I became an adult, I was not taught things, so I was behind compared to everyone else, and I had to learn a lot of things the hard way. And I wish my parents would have taught me a bunch of stuff and they didn't teach me any of it. No, I never made the Sugar Baby episode. I was just teasing it. No, I did not already make that episode. I don't want my channel being attacked and demonetized. It's already, hard enough even adding another 100 subscribers to my channel. I thought about the risks more of doing the Sugar Daddy, Sugar Baby episode, and the risks are probably not worth the rewards. If there's a red pill dating website and I could change my voice, maybe I'll do an interview about it. I need a makeup artist disguise and voice altering software though. Real Bay Boy says they don't teach you how to do your taxes in public school. They don't teach you how to balance a checkbook. They don't teach you how to invest for retirement. They don't teach you any basic personal finance things you need. They don't teach you any of that. They don't teach it. Kids should be learning entrepreneurship classes in high school. Instead, they just want you to be an employee and think that, okay, you're going to be fine as an adult. But now, like corporations fire people, the average adult who's just graduating college is going to get fired at least 5 times now. They're going to have actually, I think it might even be 10. It was at least 5. I think there's a study out saying 10 now. I need a Teletubby costume. That's not a good incognito disguise. I need like a wig with like long hair and a really good mustache and voice altering software. I mean, as bad as the public school system is here in the US, and it's real bad, I think a lot of the lack of skills that the young adults, kids in college or graduating college, do not have is because of their parents didn't teach them the stuff. You want negative rates too for your mortgage, Michael? Or Michelle? I'm not sure if negative interest rates, if they come here to the US, would benefit people with their mortgages. Only a select group of people might get negative interest rates. It might just be the federal government. It might just be banks or large corporations, the zombie companies. Everyone might not get negative interest rates. Keebler says, I don't think their parents have useful skills. Well, also, I think a lot of parents are so depressed from the jobs they work. They're so depressed with their lives and the jobs they work that they're not teaching valuable, important lessons and skills to their kids. So the kids are not learning stuff that they would have learned in past generations. I think if negative interest rates does come to the U.S., everyone's not going to get access to them. I think it'll mostly be for like hedge funds and large corporations to borrow, to do more share buybacks or leverage buyouts, zombie companies to protect them from going bankrupt, and then, of course, the large governments that are overborrowing so they don't have to cut their government budgets. Look, even with Trump draining the swamp, right? Has he cut the government budgets? He got rid of the FAA is being phased out. Federal Aviation Administration, that's being phased out. That's the only government agency I know that's being phased out or the budget's being cut. There's not really been, in my opinion, there's been very little amounts of draining the swamp. I mean, he's trying, but in some aspects he's trying, but you really have to live here in the DC metro area to understand how bad things are. That when he was coming here, that the odds of him being successful were going to be very, very low. The swamp is bigger. Well, he gave more money to the military-industrial complex for a number of reasons. In my opinion, some of it was for protection money. The military budget went up a lot. I shouldn't talk about Trump because if I say nice things about Trump on some of the things that he does that I like, people get angry and criticize me. And then if I criticize Trump on things I don't like that he does on his policies or things he says, then people get angry too. So he's probably one of those issues that I just should not talk about that much. Although I have to, since I cover investing in the economy and we have tariffs, we have, Trump is talking about massive new tariffs on European goods like French wine, French cheese, some other European goods. And then Europe is talking about, I'll do another show on this, retaliating. Exactly. I can't please everyone. I learned that the hard way. Okay, well, that's it for tonight's show. I want to thank everyone for listening. Thank you very much to my over 200 Patreon account contributors. Things are rolling now. So it looks like I'm going to be over 300 probably in less than a year. Fingers crossed. My dozen or so monthly PayPal contributors, and people throw me a tip once in a while. It's much appreciated. Then I can focus on research, content, and analysis like this, talking about current events and how they fit into the global economy. And I have a ton more of new topics for content. The China trade deal stuff, which China's not even, she's not even going to sign. I mean, China hasn't done anything they've said in 20 years with trade agreements, so. But the mainstream financial media is running with it. Sure, the stock market will probably be up on the news tomorrow on the China trade deal stuff that's been coming out the last 3 days or so. Okay, bye for now.